Hello, fellow trader. Welcome to Dean's Dojo. This is my journal. It was the 6th of August, Friday, and I want to talk about a couple things. First of all, I left a link to Thomas's video of that day below, and he has a little lesson again on just how to draw trend lines and when they break that they make a new high and all of that. Like for example, if I take this little uptrend here, straight leg up, it breaks and makes a new high. Also happens to be two measured legs up or close to two measured legs up, stuff like that. So it's really good stuff. I say that because also someone then asked where that's written, where that comes from, who said that. And of course Mac, that's one of his main things, right? Mac always says when the trend line breaks, do not trend counter trend, it will retest the high, most likely, or make a new high, new extreme. And it's actually from Al Brooks, and I think Al Brooks is like the father of everything, right? Price action wise. And I found it in his book, Reading Price Action Bar by Bar, or Price Charts, Reading Price Charts Bar by Bar. And let's see, it's in the chapter about trends, chapter 3, I think. And let's just read it. So he says, the trend continues until after it breaks its trend line. And then it continues some more. So that's basically it. You should not be trading counter trend until the market has enough strength to break the trend line. And then, however, even then you should not be entering counter trend until the market first goes back to test the extreme of the trend. So like he just goes on. This means that even after a trend line break, you should still be looking for with trend trades, because there should be a test of the old extreme. So that's basically it, right? So there it is. And the tricky thing, it all sounds simple. In a way it is, but it's not, because you need to find the right channels, and there are channels within channels. I show you one example. I have a couple trades here today. So first of all, it was better than the last 2 days, right? The first day was complete tilt, the second was just losers mostly, and now I'm more or less break even. Plus I just got left behind on really good trades. So I was pretty happy with many things. Let's look at this channel, because Thomas, for example, if you look his video, he doesn't have that one, he has a different one. He starts, I think, his channel on that. He does something of that sort, maybe. Yeah, you can say, yeah, that's also kind of a channel, and it breaks and then retests, right? Okay. That's cool, but why start from the second swing, right? Because normally you always starts from that first swing. And even the second swing, I think it's not a convincing channel. Like this one maybe. Very tight, overshoot, break, new low. That's a possibility. But if we just stick, and that's what I had live. That's what it's all about now, right? So if we stick from the high, then to the next swings and connect them. And also the bottom, if we pretend to be here, you see how it fits here. So here, and then it fits again. So you would think, okay, it's gonna come up, and then it shoots down. So one of two things. Either it's an overshoot, and we count it as such, or you double the channel. I make the midline so you can see it. So I doubled it, and it fits. But this is like a thick, short channel, and in my opinion, yeah, it's less likely. Let's just say that, it's less likely. So the better option, Thomas says that as well, is to just like keep the first and say it's an overshoot. With that in mind now, once we start consolidating here after we overshoot, and we have, pay attention, and that's one of my setups, we have 1, 2, 3, even 4 pushes lower. See that? 1, 2, 3, and the fourth is a fake out. The fourth one is perfect because it traps below the low and shoots up and ends perfectly. Then takes another bar too. But still, I like that one a lot, and I wanted to enter, and I should start putting stop orders and not limit orders, because sneaking in, it left me behind, and that's a really beautiful trade, right? Another thing why I like that trade a lot is because you could say you shouldn't trade a counter trend, but we know overshoots, we can trend counter trends if we have very strong reason to, in my opinion. But also, as in the last days, I mark yesterday's high, and it happens to be the high of basically the evening, you know, it just rallied up, that's the high. I mark it, and you see how it plays around in the overnight. And it bounces 4 times from yesterday's high. And that's a classic. That is, Al Brooks would say, it tries to reverse down into yesterday's price action, and it doesn't manage, and then gets rejected. So that's a really, really, really sound trade in my opinion. I got left behind, that's why green. Then now comes the deal, because I said, well, this trend line is in play, right? That's my belief, and I have to work with what I draw, and I cannot doubt and everything all the time. So I draw this trend line. Yes, I have an overshoot, which means that I should be leery of using the trend line as a key entry point. Overshoots often leads to a break on the other side. And I even took a hidden second entry short. So, but I was just really, the trend line just fit so well, and I took that short here, and it's hidden because it doesn't break below here. But you can see that it is 1, 2, right? It's 2 legs up. From here, 1, 2. And what else? And I draw my short-term trend up, and at the moment, for sure, it's like that. It's very narrow. It breaks on the red candle. The red candle breaks it, and we make a new high. So that's the only reason why I'm allowed to take that. Otherwise, it will be into the short-term trend line. So I thought, okay, it is aggressive because it's a hidden second entry, but I used my trend line, and that the correction has played out in my eyes. It worked. It worked for 2 points. And then comes my mistake. I think, because then I took the real second entry. I said, okay, now we have a real second entry short. Again, trend line confirmed. But now that's right into the EMA, and we have some congestion building up here. Plus, we could then say that the correction is actually not only this little leg, but that's what I mean. That's trend in trend. We have a little push that breaks and makes a new high, but that can be seen as, and now I'm going to draw it as a channel, it can be seen as this is the correction channel. And it only broke on my trade, which succeeded, but then tries to make a new high. And that's what that's what it is in the end, right? And I think if we didn't have to overshoot, I would be totally okay with that, because then there would not be any weakening of our channel, of the trend. But with that, it's too aggressive, probably. Also just because it's at the bottom of this last move down. Anyway, the magenta I'm going to talk maybe in the end. Then let's just go on. So if we believe this channel, it overshot, and look, you can measure it. I'm going to measure it with an arrow, old school. Here was like the overshoot. Let's measure it rectangular. As if we make a sliding parallel. That's what a trade devil often makes. I try to make a sliding parallel here. Very old school construction, That would be a parallel to our channel. And now I take the same distance here and draw the parallel. Yeah, it goes a bit further, but that's equidistant. It overshoots and breaks equidistant. So now we expect a new low of this channel. It doesn't have to be, because overshoots can just reverse. But once this strong move starts, I had my limit order after it broke below the lower high and got left behind. And I understand Mac, because he says the best trades you will get left behind if you use limit orders. So I think I should just use stops. Okay. Yeah, and then we have what does happen. So up to now I have one winner, one loser. And we have a short-term trend. Always draw these. Down here, I connect this top to that, like this. It breaks and makes a new low. And it bounces for the millionth time of yesterday's high. And it cannot get through it. So this, in my eyes, is a perfect trade here. Absolutely. And I have here a red arrow that says talk about scalping is important. And why? Because I thought in my greedy brain let's just swing it to the top of the range, my one contract. But then I said, no, it's against my rules. Stuck to my rules, took my 2 points somewhere here, and it reversed and comes down again to test again. You don't know this. That's why scalping is important. If you want to swing, you have to use a stop below the low or even wider. You cannot be greedy and safe at the same time. So that's why you have to stick to what you want to do. And I want to scalp, to have also statistics for myself. Okay. Then I didn't take any more trades here, like this failed second entry. Yes, of course you can. I just saw like a new smaller range building up here, but actually, the big range is that, and I had this also at that moment. Okay, and then I did, let's now go to the yellow arrows, because now I have 2 winners. No, I was left behind on that one, so I did. No, that's not true. Wait a second, did I have that one? Well, we can go and look. That would have been this one, entry 4024, target 26. So that's this one, 24 and 26, yeah. So I got that one. Must be a blue one. This one I was left behind, so that one should be a magenta one. Let's just make this color here. Okay, magenta. So, left behind. No, actually green is left behind. I'm sorry. This is a mess. Okay. Now we have, this is a magenta one and the other one is a magenta one. And that's the problem, because these are trades that are not good, and I noticed it and skunked them with like a tick or 2 loss. But here I said, okay, my second entry failed, so I should just reverse. And I think it would have worked somehow, but it's not good. It's just not good, because I played with this trend in mind. And if that trend is in my mind, I cannot take counter trend trades, right? It's impossible. And this one, I noticed that, did I notice? Because my thinking was we would go down again to my range bottom. So I just didn't feel comfortable. Like once, I think that bar printed. Yeah, once the big reversal bar printed, then I tried to get out. I think 3 takes loss here. Yeah, that's not the best habit actually. I should have just stuck with my read of going down again. But the point is maybe the range is up here, but I still think it's here. And then the problem is just don't trade in the middle of a tiny or small range. That's the whole thing. I don't think it's wrong, the thinking that it goes down. I don't think it's wrong. Okay, so that's it, and then I had to leave. So the rest I'm not gonna look at now. Good, that's mostly what I wanted to talk about. Here you have all my trades and the skunks and stuff. See, here is a skunk, for example, entry 24.75, close 25.50, so 3 ticks against me, I closed it. Yeah, I used the 5-minute chart from like Albrook style with the break in the middle, like with no price action in the middle. And I have one little thing that I'm looking at. Always, the first time it comes to this 20 EMA of Albrook's, he uses 20. You can also take 21, it doesn't matter. On this chart, without the overnight action, there is like, I think 90% so far of what I looked at the data is a reaction that gives you 2 points or more. So I could be adding that to my setups, but I will look at lots of days before I do that, okay? So, but just like we can go through quickly. And I mean, always when the day starts above or below the EMA and is for a longer time above. So for example, here we see it came to the EMA here, and in the end it made 2 points, before it made 2 points to the downside. Here as well, same, 2 points to the upside, 1,000,000 points to the downside. So yeah, okay. Anyway, I'm gonna put that next week if I have time to study it. Okay. So I hope you're doing great and have a nice weekend. Study well and see you next time. Bye bye.